Hello, friends. Today, something that I've been asked a lot, and it's should I invest in RRSPs or in real estate? As a single professional, I had debt and no savings after my divorce. I always wonder how I can start investing in real estate to secure my future. I studied programs that gave me all the benefits of investing in real estate. Some claim I could start with no money, but I could not find one that gave me the practical, actionable steps I needed. As a wealth advisor, I've met people that own real estate but weren't ahead financially. They were rich, but they weren't wealthy. Then I finally realized that there was one vital component missing that makes someone become wealthy or not. And on this show, I will reveal what I found and give you the step-by-step actions to start investing in real estate and increase your wealth. My name is Araceli. Let's get started. Hello, friends. The question is always RSPs or real estate. Well, in this show today, we're going to show you what the difference is so you can make an informed decision in what to invest, whether it's RSPs or real estate. Let me put on my presentation so you can visualize a little bit better. There we go. Okay, so let's get started. So the question is, should I invest in RSP or in real estate? So which one's better? Okay, so let's see if we can answer the question. So what we're going to cover today is the RSP and real estate definition, asset classes, investment growth, and a quick comparison. Okay, so let's get started with the RRSP. So RRSP stands for Registered Retirement Savings Plan. And for my friends in the US, the equivalent is the IRA. And basically, this is an account. The RRSP doesn't really give you any returns. It's basically just an account that holds investments, and we're going to go into it in a minute. But the characteristics or properties of this account is to reduce your taxable income in the year, and it grows tax deferred. So let's take a look at our real estate. So real estate is really not an account, it's an asset class. Okay, so therefore, if the question, should I invest in an RSP or real estate, it's really not equivalent because you're comparing apples and oranges. An RSP really does not have a return, it doesn't perform anything, it's just a simple account. And real estate is an asset class, and we're going to go in to see the difference because the question mainly is that it says, well, my RSPs are really not performing, they're really giving me very low interest or lower return. So I think I should take that out and put into real estate. So let's take a look and see why that question is brought to us. First of all, let's take a look at what asset allocation. And we basically have four, which is cash, bonds, stocks or equities, and real estate or alternative asset allocations, right? And within those, you can have, each one of them has a performance and they are an investment. So if we go into an RSP, which is an account, so you just open an account, just imagine that you have a big bucket that is empty. So your bucket is your RSP and it's going to hold whatever you put inside of it. And you can have cash, which is your savings accounts or hard cash. And so there's basically liquid assets, something that you can immediately can go and buy something. You also have a fixed income or lending. That means that you are lending money to somebody. And common ones are bonds or fixed deposits. And then we have another asset class, which is equity. And equity, it's ownership in businesses. And they come in the form of stocks, mutual funds, segregated funds, index funds or ETFs, or also called exchange trade funds. And then if you see here, the alternative space or the asset class that is alternative is usually, sometimes they divide it in two, in real estates and commodities. But in this case, I'm just going to put it all together because if you see, there is no arrow going into an RSP. And as of right now, you cannot hold alternative asset classes, which is real estate or physical property, or REITs, which is real estate investment trust, or commodities like gold, silver, or cryptocurrencies. As of right now, I don't know in the future if that's going to be possible, but for right now, the only three things that you can have in your RSP account would be cash, fixed income, or equity. So what does that matter, right? Well, a lot of people say, I have an RSP, but they really don't know what's inside the RSP. And if you see cash, this is how the growth has been performing in history. So you have cash. Cash is not going to give you any return. And the way you look at it is, if you put $100 in a shoebox and store it in your closet and leave it there for 10 years, and in 10 years you take that box out, take the dust out and open it up, you're still going to have $100. So that means there is no return. You didn't find out $200 there. It's $100. That's it. It doesn't matter when. Now we have fixed income, which it'll give you a little bit of interest, but not a lot, right? And then you have equity. And equity also, you can go from low risk to higher risk, and obviously the return will be accordingly. So equity will give you better than fixed income. And then the alternative, which is the real estate and commodities, will give you the highest return. But as you can see, over time, the better the return, the higher the risk. And as you saw in the previous slide, in your RSP, you can only have cash, fixed income, or equities. So that's why the majority of people, and when I look at their statements, when I'm doing an analysis for people, they don't realize that they either have it in cash or in fixed income, which is a very, very small return. Majority of people should be invested in equities according to your age and your risk tolerance, but that's how you can get a little bit better return within your RRSP. So I have put together a comparison chart so you can have an idea. And this is, remember, I'm just comparing RRSP to real estate. I'm not comparing the actual return or growth of the two of them, because as I said, they're apples and oranges, completely different. But if you're going to compare the two of them, this is how I would compare them. First of all is leverage. And if you see the RSP says no, that means that if you save $50 a month, you only have $50, and $50 are going to grow according to what you have put inside your RSP, which it could be cash, fixed income, asset allocation, or equities. With real estate, you can leverage. What that means is if you have a down payment, you can buy a $500,000 house with that smaller amount. Maybe you have only $100,000. You don't need to come up with the entire $500,000. That's what is leverage means. You cannot do that with the RRSPs. It grows tax deferred, absolutely, with your RRSPs. With real estate, yes, because the growth that comes every year in your house, the tax man is not going to come to you and say, well, your house appreciated $50,000, now you owe me this much for taxes. No, you're going to do that at the end when you sell the property. So now, liquidity. That means that you can access that cash immediately. With your RSP, you can do that. With real estate, no. Even in the best markets, you still need to wait for the closing date, for all the due diligence from the buyer, and it's not going to be like tomorrow that you're gonna get your money. So it's not liquid. Now, is it taxable at retirement? Yes, absolutely. For real estate, no, if it is your principal residence. But if you do have an investment property, you will have to pay capital gains. And this one, I want to give you a little bit of a difference here, because the RRSP, let's say that you are growing your money and you get $500,000. You accumulate $500,000 in your RRSP. What is going to happen when you start your retirement or start withdrawing from your RRSP, you're not going to take the entire amount out. You're going to take the amount that you need for that year, and therefore that's the only tax that you will pay. Let's say that you take $20,000 in the year, you will be taxed on $20,000, and the remaining of it will still grow a little bit, and then when you take another $20,000, they will tax you on that. However, when you are selling a property, of course, if it is your principal residence, you don't have to worry about any tax implication. However, if you are selling an investment property, normally the difference between what you bought it and what you're selling it for, that difference is that you would have to pay capital gains on that. And if you have held the property for quite a while, maybe that difference is quite a lot, and that tax would be due in that year and when you sell the property. So that is a little bit of a disadvantage. Requires large sums of money to start. If you have an RSP, you can start with $50 a month, no problem. With real estate, not so much. You have to really at least have that down payment put together, and in some cases, depending where you are, it's quite large. So it's not going to be the $50 a month. So it's harder to get in. Ongoing maintenance with an RSP, when you have selected the fund that you want to invest in, the money goes in, you don't have to do anything at all. With real estate, you do. You still have to look after, the maintenance of what is going on with the house, especially if you do have an investment property. There's always more maintenance to do. So to answer the question, RRSPs or real estate, I will say you do both. If you don't have enough money to buy a property, get started with your RRSP. If you are now having the down payment and ready to buy real estate, go for it as well. Remember, the two of them have different properties, and they will serve you well as a well-diversified portfolio. So I hope this clarified exactly what the question was, and I hope you're investing in both real estate and RRSPs. And if you do need help to see what's inside your RRSP, let me know and we can set up a private call. Until the next one. Thank you for being here on the show. Please remember to subscribe and hit the notification bell to get notified when there are more shows available. And if you would like to have more information on how to start investing in real estate, please visit my website at www.ARACELI'Shernandez.com. Thank you.